Alright everyone, and welcome back to the channel for another Bitcoin update. So there's a few charts that I want to run through today. In my opinion, it looks like more pain is incoming in the markets. Let's talk about this. Well, we've been predicting this on my channel for the past couple of days, for the past couple of weeks, for the past couple of months, and it looks like, at least in the immediate short term, we're having that next leg to the downside. On our first chart, we are looking at the bear flag that we've been stuck in for a very long period in time. It is absolutely mind-boggling to me that people think the bottom is in, people are getting bullish, and we're in a bear flag. Like, if you studied any form of TA, you know not to get bullish in a bear flag. I don't know what people are doing, but apparently we're bullish while we're in this bear flag. So we've been bouncing around in this range. We've more or less just been in a crab market, establishing this channel, deciding what range we're going to break to the upside or the downside of. Every time we've come to the bottom of this, we've had quick moves to the upside, massive increases in gains, and every time we've come up to the top of this, we've had massive moves to the downside with massive gains for the bears. Now, quite recently, we came up to the top of this, didn't quite make it, and then we started to rapidly roll down. The only other time, looking at our chart, that we didn't quite make it to the top of this is both of these instances here. If we look at every other time, you know, we came up to the trend line, we exceeded the trend line, we exceeded the trend line. These are the only times that we haven't exceeded the trend line, and with this shows weakness in the markets. We came almost up to the trend line, and we almost immediately, within the next week, started rocketing to the downside, to the bottom of this bear flag. And I think this is what we're going to be doing in the immediate short term now. There has been a time where we have actually closed a daily candle body close beneath this white line, which is the heart line of this bear flag, and we actually managed to move back up to the upside without quite reaching the bottom. So why was this? Well, for this specific instance, what you can see is if we pull a box, you can see we had this big range round about here, and we kind of just came back and retested it. Like you can see, you know, over here, this was resistance, many times, resistance. We poked our head back above it. We broke beneath the heart line, but we came back and we retested this resistance to support, and then we took another leg to the upside. So if we're going to do something similar to that, do we have any other regions of support that we could potentially be flipping? This is really a case for the bulls. I don't think this is going to be in play. I don't think we're going to be flipping anything bullish towards the bottom of the channel, but nonetheless, I will give you the unbiased TA as it is. If we do something like this, you can expect, once again, if you're a bull, this is not what I'm predicting for a move back down to the bottom of the channel, potentially testing these previous regions, which have been resistance. This was support here. This was flipped to support, but we haven't come back down and back tested it. So a case for the bulls, once again, which is not what I'm in agreement with, could be that we're going to be coming down to 22,000 before a move back up to the upside. Now, even if you are bullish, then like I said, you know, 22,000 does seem to be in play. We're breaking beneath the heart line on the daily time frame. If you do see Bitcoin closing below that 23,550 range, it's going to basically be inevitable. Previous times we had about 5 to 6% capitulation beneath this heart line, and from where we are right now, this would mean about another 5.5% move. For Bitcoin, specifically looking at this chart, we've also come up and got rejected from the 100-day moving average, which really is not a good idea or a good sign. The last couple of times we've approached this and came back into it and got rejected, we almost immediately had a massive leg back down to the downside. In the last capitulation, we didn't actually allow the 100-day to catch up to us. However, because of this elongated bear flag, we have allowed it to catch up to us and we've got rejected. The last time we actually came into this was when we were in basically a huge bear flag from back here. I mean, you can kind of see it if I draw it out like this. You know, because of this bear flag that elongated for so long, we were able to catch up with the price action, and then we flipped beneath the 100 and we absolutely capitulated. You can also see if we pull up the EMA ribbons, first of all, starting off on the weekly time frame, EMA ribbons are miles above our heads. In fact, the 200 EMA is, you know, the first one that's coming up to us, and this is 26,500. So we're miles away from the weekly. On the daily time frame, we're falling at the absolute lows of these right now. So once again, another case for the bulls could be, hey, as long as we have a daily candle body close above 20 23,200. So if you start seeing Bitcoin on the daily time frame and specifically the weekly as well going below 23,200, you're going to see massive capitulations. At the time of recording this, we're at 23,260. So yeah, definitely keep your eyes on the daily candle body close. If we start capitulating beneath these daily EMA ribbons, it's not going to be good for the price action. We're going to have very, very quick swings to the downside. The only other times where we've got rejected from these and we didn't move immediately back down to the bottom of these was once again, like I said, when we retested this entire range that was previous resistance flipped to support. So if we move on from this chart, not a lot to update, even though there was quite a few things, to be honest. Over on the bear flag, once again, 22,000 is where I think we're going to in the immediate short term. About another 5 or 6% drop before we can expect anything. Now, I would actually like to say, if we do come down to this support box again, 21,300, bounce back up to this and confirm a breakdown, I will be smashing my chest and screaming for the move back down to 17,000, like I've been saying for a while. So I'll keep you updated on this. Once again, just another day in the bear flag. We're moving to the downside. And, you know, for the love of God, I don't understand how anyone who has done 10 minutes of basic TA can be bullish at this moment in time, because we're in a bear flag. So, like I said, you know, invert this, EMA ribbons, get rid of these. This is really bullish. This is a bull flag. This is when you get bullish. This is a bear flag. This is when you get bearish. So moving on from here, what you also have another interpretation of this. You can call this a bearish pennant if we do just connect the pole up here. So this could also be a bearish pennant. I won't take the price target of this. It will probably be at 0 or round about 10k, which I don't think we're going to go to, so it's not too important. If we remove this and just focus on the rising wedge as a whole, this is obviously a bearish pattern. So what we should be expecting with this is maybe to bounce around a little bit more. I don't just think we're going to immediately rocket beneath the bottom of this. So what I'm actually expecting is something like this. This beautifully lines up, you know, 22,700. This could mean that we could be falling to the bottom of the rising wedge here, because over on the flag, which has, I would definitely say, more beautiful touch points on this one, you've got 22,000, you know, that is the next leg down. So we could definitely invalidate this very, very quickly. And if we do, you're definitely going to see a very, very quick return back to the lows. In my opinion, the price target of this, probably easiest to just take it from the absolute low down here at 17,600. I'd say we've got a little bit of support down there, but I wouldn't imagine too much, as we've really got no volume traded around here. If we pull up the original line that I was having inside this pattern, you can see, you know, touch point here, might even be able to pull it back on the candle body close over here, and you can see on the daily time frame we're slipping beneath this support at this moment in time, while we still are in the rising wedge, which is definitely something you should take with a higher grain of salt, because this rising wedge is much more important than this individual line on this chart. It's been playing out for longer. We've got more touch points. It's more valid. Looks like a nicer pattern. We've got touch points on the top as well. This would be saying that in the immediate short term, the more conservative target would be about a 2.5% breakdown, once again to that 22,600 range, which is still about another $700 to $800 wiped off from Bitcoin's market. So this rising wedge, once again, another bearish pattern, which should be breaking down very, very soon. If we pull up to the MFI fractal, this is one of my favorite charts. I've been talking about this a lot. I really just want to quickly run through this one because we have talked about this many times. What you see with this is we're basically highlighting the tops in the price action on BTC USD, and we're also correlating these to the tops on the MFI, which, if you don't know, is the money flow index. This is basically like a weighted RSI. This is basically the RSI, but it also takes into account of the volume, which is why some people call it the volume weighted RSI. I much prefer it to the RSI. It becomes over exuberant to the upside and the downside a lot quicker than the RSI. So you can see these tops and these bottoms are beautifully called over on the BTC price. Now, what you'll notice is when a lot of volume comes into the markets to the upside, typically when there's not much strength, or when really the relative strength of the market is on its last legs, because we've been moving up so much, you witness these regions where on the MFI you become fairly overextended. Now, granted, a couple of these, this one wasn't too overextended. This was really a retest of the heart line, but nonetheless, a retest of the heart line and breaking down is bearish. So you can see with these two heartline retests quite recently, we broke down. We had nasty breakdowns, yada, yada, yada. And with this one as well, you exceeded the heartline before a nasty breakdown to the downside as well. What I really want to show you is this double top over here in the MFI, and this double top over here, well, it's really like a triple top over in the price action, and this range that we've got going on right now, and this MFI. So we're really only looking at these two data points respectively. We're looking at this, oh, that was a bit too big. We're looking at this top in the price action in the MFI, and we're looking at this top in the price action and this top in the MFI. What you notice is the last time why we're looking at this is because the MFI quite recently came up to about 78 before topping out. The last time we were this high is when we were lollygagging above the 80 region, between 80 and 90. We were lollygagging on the MFI, and we had a brutal capitulation from 48,000 almost very immediately down to 25,000 before, you know, a month or so of prolonged sideways action and then another breakdown. But what's super interesting about this, as you can see, you know, once the MFI really starts heavily capitulating from the top, there's almost nothing you can do to pull it back. And I'm not going to prove my point. You can go back and see throughout pretty much every structure, you know, even in the conservative ones, you break down from the top of the MFI and you're going to have a dirty landslide back down to the bottom, or at least near the bottom. And in my opinion, that's what we're going to see ASAP. I think the money flow index, and by the way, you know, you can go on my channel, you can go on videos. I'm pretty sure we made this video on the MFI a while ago. Like, we've been talking about, yeah, here, the money flow index a month ago. We've been talking about these overextensions for quite some time now, even making specific videos on it. Just a quick update to let you know, this is finally starting to play out. The MFI is breaking to the downside. And yeah, I expect this to get a lot of continuation. I expect a lot of volume to continue with this breakdown. At this moment in time, I talked about it in one of the videos I recorded earlier. I believe it was for Cadena specifically. But we were looking at the volume on Bitcoin and Cadena. And for Bitcoin, the Bitcoin volume was increasing. And as you can see right here, you've got a lot of Bitcoin being sold over on Bybit, Coinbase, Bitfinex, Bittrex, whatever you're looking at. Especially the leverage trading platforms like Binance, Bybit, Femex, there is a lot of volume coming in over on these places. So volume is coming in, money flow index is overextended. Where do I think we're going to be coming down to in the macro term for the next leg down? Well, not only do I think the previous lows round about 17,600 would be in play, but in the midterm, we really need to fill this CME gap at 18,420, which on the daily time frame correlates to the gap round about here on December 2020. Now, you might be wondering, you know, we've already broken beneath 18,400, so why do we need to fill a CME gap that we haven't already we've already filled? Well, we broke beneath this CME gap at 18,400. We broke beneath it on the weekend, so we did not actually fill this CME gap because, once again, Chicago Mercantile Exchange is not open on the weekend, so the CME futures were not open when Bitcoin was trading beneath the CME gap, and subsequently this CME gap has not been filled as the Chicago Mercantile Exchange for Bitcoin was not online when we were down at these regions. So we still need to come down and fill 18,420. Even if you are a bull, you think the low is in, you think we're going to moon off to the top or whatever, we haven't had a bottoming pattern in yet. So let's say hypothetically the bottom's already in, we at least need a bottoming pattern, and something like this, like a W pattern coming into the CME gap, would be the most likely in my opinion. But bear in mind, I am a bear. I am just giving you an unbiased perspective. I'm saying, hey, if this is the bull case, then this is what is going to be playing out. But once again, remember, I've been bearish for months and months and months and months and months now. I've been saving tons of money sitting on the sidelines. Even after this rally, you can just zoom out and see, you know, we've been sitting on the sidelines since round about here. So it's definitely not hard to see. Sitting on the sidelines really saves lives. Heiken RCs have not yet flipped bearish over on Bitcoin. However, on the daily time frame, they have started to flip bearish. We're looking really, really weak for Bitcoin at this moment in time. So the CME gap down here at 18,500 is where I think we're going to be in about the next month or so. So we've looked at the MFI overextension. It's the same on the RSI as well. Momentum indicators, oscillators, they're all heavily overextended. We've had multiple rejects, or we're facing retests and failed retests right now on the EMA ribbons. We're currently wicking beneath these. We've gone down about $150 since I started recording this video. Once again, like I said, we are going to be moving down to 22,000 in the immediate short term. That is my prediction for Bitcoin. Wrapping up this video, I just want to quickly give you an update on these two charts. The momentum indicators, very, very quickly firing these off. On the daily time frame, the MACD has started to flip bearish. Histogram bars are ticking down very, very fast, a lot faster than this failed move to the downside here. So I'd be saying that the MACD is going to flip very, very bearish very quickly. We are above the heart line, which means technically at this moment in time, the MACD is still bullish, even though we flipped bearish. So MACD has got a lot of room to move to the downside. Over on the money flow index, we already talked about this one, so I won't talk about this one. Once again, this was this chart over here. We specifically dived into the MFI. Over on the squeeze momentum indicator, one of my favorite momentum indicators, we are tipping over into bearish territory once again. Bulls are still kind of in control, but we are running out very, very quickly. On the lower time frames, bears are massively taking control of this trend. You've got things like the MACD rocketing to the downside, MFI rocketing down, squeeze mom rocketing down. I really don't want to predict what's going to be going on in the lower time frame, so I'm going to stick to the daily time frame. You know me, I like to predict what's going on in the midterm. And once again, I mean, looking at this just in terms of the fibs, we forgot to talk about this. If we get rid of these, we've looked at momentum. Momentum's bearish. Money flow index heading down. MACD's not even really flipped to bearish. Squeeze one massively heading down. And if we look at the Fibonacci's from the most recent swing high to swing low over on the BTC USD price, we came up to the 0.5, and now we're already kind of failing to hold this 382. This is round about 240. We're literally sitting on it right now, trying to wick beneath it. So Bitcoin is showing extreme weakness right now. If we head over to this chart, this is where we're going to wrap up this video, and I really only want to spend, a couple of seconds on this one because I made a video about this yesterday saying something like this. This was what I was saying I think is going to be playing out for Bitcoin. Now, I still think something like this is going to be playing out. You can see what I wanted to update you on is we are pushing to the downside of this uptrending level of support very, very quickly. Now, bear in mind, once again, this is a trend line, so there's multiple ways you can draw this. I imagine there are going to be some bulls that are going to want to draw it like this, and then they're going to want to draw it from the candle body close here. So, once again, take it with a grain of salt because it is just a trend line. You can draw these 1,000,001 different ways. How I've got it drawn is the line of best fit. You can see touch points here, all throughout here and here and here and here. I think this is what categorically lines up the market. Or defines the market as best as I can. So I'd say this is the region you'd not want to close below 23,000, and it's going to get higher every day. Tomorrow, you'd not want to close below 23,100. The day after that, you wouldn't want to close below 23,250. The day after that, 23,360. So if we don't start pushing up ASAP, we're going to be breaking down from support. This breakdown of this uptrending level of support is going to allow more momentum to break down the rising wedge, which is at 22,600. That momentum breaking down the rising wedge is going to allow enough momentum to take down the bear flag, which in the next day or so is going to be at 22,000, so only about $1,200. This break of this bear flag at 22,000 is going to cause enough momentum to head back down for the retest of the CME gaps at 18,420. When we're back down at the lows, momentum's going to be kicking in. The stock market's going to be heading down. I've just recorded a update on the stock market and why I think that's heading down. So if you want to know why I think the stock market's heading down, I would have already uploaded that video first. But yeah, this is what I think is going to be playing out. Something like this, just like we said yesterday. So just a quick update, my friends. I say quick, but this is probably another one of those longer videos. But yeah, this is genuinely what I see playing out at this moment in time. When we zoom out and get down to this, this is what I see. Resistance or previous support being flipped as resistance. You've got, this was resistance here, this was flipped as support, this was support, this was support, support, broke down, support, you broke down. This became resistance as we came up and back tested it in the past couple of weeks. And as you can see, as we've come back into contact with this trend line, Bitcoin USD wanted nothing to do with these valuations. We've moved back down to the downside and we're moving down pretty fast. So that is all I've got for you today for the BTC price. If you wanted more updates, I have recorded a video today. Like I said, we did a stock market update, and I also recorded an update with some things that I see playing out with the Fibonacci's on the total cryptocurrency market cap in the altcoin market. And then obviously we did a KDA update today. So a couple of updates out. All of them basically tie in with each other apart from the KDA one that is separate. So all I've got for you today, my friends, as always, get ready for more pain. I will be very, very happy to ape into Bitcoin as we break beneath these lows. A lot of people forget, you know, they hear me bearish on Bitcoin. If you're new to the channel and you might not know this, I'm a Bitcoin maxi. I've been buying Bitcoin since 2017. My average buy-in price is very, very cheap. It's way below 10,000, my average buy-in price. I've been very, very patient, sitting on the sidelines for months and months and months for Bitcoin. And we've been dominating this bear market, and I imagine we're going to dominate the next bull market. So stick around for that. That's all I've got for you today, my friends. And as always, Cowboy out. Peace.